Assalamu alaikum. Today we are in our third lecture and we have performed around 7 steps about the basics of data frame and how to use Jupyter Notebook with the Facebook stats. Now today we will move forward. In the last lab, as we have recorded as well, we have done all the things like reading the CSV file, checking the top 5 rows and the last 5 rows, describing the file using all the concepts, finding the shapes, means the rows and columns of a file. We have also studied the concept of slicing, slicing by position and slicing by label. So at the end we have plotted our our required column, which is the column of close with some of the slicing data, and we have plotted the 3 years data combined in a single plot. Now today we will move forward, and from the same repository, from the same file, we will continue and we will teach you about some new things. What is the price difference? The price difference is basically the difference between the closing price of tomorrow and the closing price of today. So if you see the data, you can see there is a close column and there is some price and there is the same price of another day. If we subtract two of the prices, we will get to know about the price difference. But we have the data consisting of 780 rows and 6 column. How we can calculate it today? By using our knowledge of Python programming. So let us move and I will explain you how we can calculate the price difference. So first of all, we will create a price difference column and I will explain you how to create a price difference column. But before explaining it, I want to show you the steps I am going to follow in a few seconds. So suppose I am showing you that I will make a new column named as price difference, and I will generate another column which is known as price one, and I will subtract this column with the close column. But the question arises, from where this price column we can obtain? So let us start with the basic concept how I can subtract the close price of tomorrow with the close price of today. First of all, I will generate a new column and explain you the shift function. So let me start with the shift function, how this will work. So you can see here is a date and close column, and I will use close shift -1. So what it will be do, it will transform my column to the upward side using a 1 value. I am going to show you again. So you can see it has erased this first value and move all the values by upward. So I will do this to create my price difference column. So I have generated a new column named as price 1. So this column is generated by using a simple command fb price 1, and I have taken the close column and shifted all the values upward by 1. You can see it clearly in this short animation. Now I will show you how I have done this shifting task in actual in my program. You can see the animation. It will give you a clear concept what is what is happened, what is actually performed in this code. So let me start from the today's code. I will write fb and I am going to generate a new column. So for generating a new column, I have used the fb, which is the variable in which all my data is saved, and in that fb I have added price with the help of a square bracket, I will name it as price 1, so this should be my new column. So what I will do, I will create a new column, and this new column will be created with the help of the close column, but all the values of this close column will be shifted by -1. So basically, why we are doing this, the purpose of doing this is that we want to calculate the price difference, and we can only calculate by subtracting this. So let me write what I have explained you in few seconds back. So I will write shift -1. So this will generate a new column named as price 1. Let me show you that new column so you can see all the things in practical. So you can see there is a new column generated named as price 1. It is same as the close column, but in this column the value of top row, top, this value has erased, and all the other values are shifted upward by 1. So using this strategy we will easily apply our formula. This is the reason that why Python is used in stock trading nowadays. So I have generated a new column named as price 1. Now I will calculate the price difference. I am using this formula right now. So I will make a new column named as FB, and in this column I will write price and DIFF difference, and this price difference can be easily calculated by using the close column, and I will subtract this close column with the new generated column. So I have to write here FB price 1. This is my new generated column, and I will subtract this with the help of close column. So I will write FB and I will write here close. So you can write direct this value in the subtraction formula, or for easiness you can write in this form as well. Both are the same. So let me run it and we will see the output of this the price difference column. So I have run it and I will write FB dot head to check the output. So I am writing FB dot head, and you can see there is a new column generated named as price difference, and everyone knows that this price difference is generated as a result of subtraction from the price 1 column and the close column. Means it is basically the close price of tomorrow which we have generated by using the shift function, and the close price of day which is already available in the close column. Now I will move forward and we will calculate the return, the daily return. So the daily return is, the calculation of daily return is very easy, and we have to divide the price difference by closing price of today. So I have made an animation after the price difference for the calculation of daily return. So you can see you can generate a daily return column by using the same method, and we will divide the price difference column, the column which we have just generated, with the close column, and we will get the daily return. And daily return is also a major indicator in stock trading. So let me write the code for daily return. So I will generate a new column for the daily return. So I will name the column as RUTURN written, and this column is generated as a division, as a result of division of the column of price difference. I forgot to add the inverted commas, and the closing price of today, which is the very simple close column, which is the already available column. So let me run it, and I will see it again for my satisfaction. fb.head, and you will see the written column is generated. So we have calculated three things yet. First of all, I have told you that how we can calculate the price difference, but for the price difference we need the closing price of tomorrow. We use the shift function, and after the price difference we calculated the daily return. Now the third thing we want to calculate is the direction. So before calculation of direction, I want to show you some of the rules we are going to follow for the calculation of direction. So you can see we have just find the shift function. We have generated a new column. We have subtracted the closing price of tomorrow and the closing price of today for finding the price difference. Then we have generated the written column by dividing with the help of simple formula. Now we will check the direction of our data, and we will explore this major financial indicator of stock trading named as direction. So let me start an animation and you will get the proper idea. So if the price difference is greater than 0, then we call is at as upward direction. If the price difference is 0 or less than equal to 0, so we can call it as a down direction. So for representing up we have used the 1, for representing down we have used the -1. So how we can calculate the direction of our data or the direction of our columns? So we are going to use list comprehension. So there is a method which is used in list, which is used commonly in Python, list comprehension. Let me explain you in a little deeper and an easier way so you can get the proper concept. So see it on the screen, leave all the things, just see on the screen how we can calculate the list comprehension, how we can work. So first of all, let me run it, then I will explain it in parts. So in the list comprehension, you can see that the middle part is condition. So what is the condition? You have seen it is written if fb.loc log. I have already explained you log, that it is the selection by label, and in the previous lecture we have studied it. And in the log we have used two terms. Basically we are checking the whole column of the price difference if it is greater than 0. Now someone can ask, what is EI? EI is any variable. You can use another variable as well. It is on your choice. So this is the condition part, and if the condition is true, means if it is greater than 0, it should have to give you the direction of 1. If it is 0 or less than 0, it should have to give the direction of -1. So this is the condition part. And you can see after the condition part there is written else. Else is the second part of the condition, and after examining all the conditions you have to look all through the price difference column. For looking through the complete price difference column, we have used a for loop. For I have told you already, you can use ei, you can use I, any variable in for loop. For I in fb dot index. What is fb? Fb is the variable in which all the data is read by us. What is index? Index is basically the location of each element in the price difference column. So index basically is the date column, is the location, is the number of rows, is the basically the assigned number of row 0, row 1 is basically the index, and it will move through all the indexes and check whether the value is 1 or whether the value is -1. So let me write this piece of code and we will explain it better by doing a practical application of that. We have also given you the lecture of list comprehension in the previous classes of Python 1 course. So if you don't understand the proper concept, I recommend you to go towards the last lecture, the last year lecture of Python 1, and you will get the better concept. So let me write for a new column, which is the direction column, and in the direction column I am writing list comprehension. So someone will ask, write one, you can write variables. In the last lecture we have written about variables, so it is not necessary to write one, but our condition is based on only two things, whether it is give the answer of 1, so or the answer of -1. So that's why we have used 1, and after else you will see I will use -1. So I am writing fb, and all the things is based on price difference column, so I am writing price diff difference and dot loc means we are selecting it by label, and I will write dot location, and in dot location I will make a square bracket as you have studied that I will write ei, and ei greater than 0. I am not writing two terms. Ei is enough. We can do it for in that way as well. So no issue about it. Okay. So what is the rule? Let me check the rule again. The rule was if price difference greater than 0, then the direction is up. Otherwise, it will give us -1. So let me write it again. So greater than 0, and otherwise, what is the otherwise? Is the else condition, and I will write -1. So these are the two conditions. Now we'll put in a space bar, and the third part is all about using the for loop throughout the column. So I write fb dot index. So let me check if there is any mistake, and I don't think that we have done any mistake, and let me run it and we will check it by fb.head if it is working in the right direction or not. So I am writing fb.head. So let us see whether it has calculated the direction properly or not. You can see the places where it has value greater than 0, it has given 1, while in the places where it has value less than 0 or equal to 0, it has given -1. So I am hopeful that it is working properly according to the direction column. So this is calculated based upon price difference. So we have used price difference here. You can see we have used the price difference, and you can measure it using the price difference value. This is greater than 0, it has 1. It is less than 0, it has -1. So this is the direction column, and after the direction column we have one very important thing which we are going to calculate in the next few minutes, that is the major financial indicator, that is the moving average column. So what is moving average? That is the fourth part of our today's lab. Moving average is a widely used signal in stock trading, which is about loading the average price over a defined number of days. What is moving average? Basically, it is telling about the stock trading, and we will find about the trends, we will find about the fast signal or slow signal. Using this concept of moving average, we will find how many days the signal is going up and how many days the signal is going down. It is with the closing price, or it is not with the closing price, and the fluctuation is very common in these stock prices. So basically we can take an average price over a period of days. So it will be in greater picture with you when I will be doing live practical with it. So people use this moving average to find out the stock in the trading data. So let me work on moving average in front of you, but before working I recommend you to see this animation, this video, so you can get the proper idea before the actual practical of moving average. So we will create a moving average column in this. And how we can create a moving average column? Everyone knows that we have to write FB and the name of the column. So what I am showing you right now, basically I am calculating the moving average of 3 days. I am writing FB close, which is the closing day. I'm writing FB close dot shift 1. It is the day before the closing date. And I am writing FB dot close dot shift 2 divided by 3, then the third day. So this is the average of 3 days. I am showing you just for your understanding. This is not we are going to do, because we have very small and easy function named as rolling function. So this is what these three things are. These three things are the averages of 3 days. So what shift 1 will do? Shift minus 1 will move the data up. So shift 1 will move the data down, and in the empty space it will fill NaN. NaN means the cell is empty. So shift minus 1 moves the data up, and shift positive 1 or positive 2 moves the data down. I have shown you this with the help of animation, so you can get the better understanding without any confusion in our concept. So we are not going to use these difficult function of shift. Just I am showing you that how I am calculating the average of 1 day, 2 day or 3 day. We are not going to use these difficult thing, because we have in Python a very necessary, a very significant function named as rolling function, and I will use that rolling function today without going through these tough discussions. Because Python, that's why Python is very common in financial market. That's why Python is grabbing the market of stocks. Python is very popular in financial trading, in risk assessment, because there are a lot of functions, there are a lot of easy functions. So we can do our difficult task in just a second without any confusion. So you can see I have written a function in front of you, MA40, a generation of new column, and no use of shift. This rolling function, I have put the value of 40. So this rolling function will calculate the average stock rate of 40 days. So this rolling function will calculate the moving average of 200 days. So moving average is basically a signal which is used for average price over a defined number of days. So what this will do for us, this rolling function will calculate the average according to our requirement, and we can plot the moving average as well. We can first plot the closing price, when we can plot the moving average of 40 days, and we can plot after it, we can plot the moving average of 200 days. And this moving average is showing you that the average of 40 days is in friendship with the closing prices, while the average of 200 days is not in friendship with the closing prices of every day. So this is the financial indicator in building the trading models. You can see the 40 MA40, which is a moving average of 40 days, is a fast signal as compared to the moving average of 200 days. So this signal, this moving average, is an indicator in stock trading, and financial analysts say that that the moving average is going with the closing data, with the closing prices, and it will increase or decrease. This is the idea. The idea behind this concept is that we are analyzing, we are using, or we are discussing the financial trends, and based on the trends people do investment on these type of shares. So this is the only theoretical part. Let us calculate our moving average. So in our case we will find the moving average of not 40 days, we will go for 50 days. So let me start, and we will give you some practical demonstration so we can get some proper idea what we are doing and what we are studying. So let me work for you, and first I will do the moving average of 50 days, and we will after understanding, as we have got the concept, we will do a lot of things for fun, we will do a lot of things for practice. So I am generating a new column, MA50. What is meant by MA50? MA50 is the moving average of 50 days. So what I am writing, MA50, and I will use the closing price column. So I will write CLOSE, close, and in the closing I will write for rolling average. For basically the rolling average, we are calculating the mean of the rolling average of the 50 days. So I am writing dot MEAN. It has also the capability to find the sum. So we have no work with the sum now, so we are using the moving average of 50 days, and I want to plot this moving average, because it will generate a column, it will make a column, but how I can see whether it is a good signal or whether is it a bad signal, whether it is with my closing price, whether it is showing me some of the things or not. So I will use some plt.figure and give the size as we have given before. So I will write fig size is equals to 15 comma 8. 15 comma 8 is the length and width basically, and I want to plot the moving average. So I have generated a column. This command will generate a column of 50 days, MA50. In this column there will be addition of MA50, but now I want to plot some of the things with the closing price. So what I am writing, see my screen clearly, I want to plot the moving average of 50 days with the closing price of 2015 50 days. So I will take 50 days. So let me write and you will get the idea. I am copying the above thing what I have written. It will generate a column, but I don't want to see the column, I want to see the plot. So I am using the previous concept of location by label, and in this label I am not going to plot the whole data. I am taking the year of 2015. So the year of 2015, the one date means 1st January. I am taking the concept of slicing, so you can get the better revision of all the things discussed above. So I am taking around December. December is the 12th month and 31 is the last date of the year. So I am taking all 2015 rows and want this Python to plot my data. So I am writing plot and in this I am writing label, and the label should be means it should show me that this color line is of MA50, and I don't want to plot it alone, but I want to plot the closing price with it, so that you can see how the moving average is friendly with the closing prices. So in the closing prices I will only take 2015 data, as I have taken the data of 2015 in the case of moving average as well, and in the last we will take the moving average of 200 days as well. Don't worry, we will let you practice a lot in live coding. We will teach you a lot of things. So I am taking the closing prices of the 12-month means the complete year as well. So I want to see both of the things, the moving average of 50 days and the closing prices, both on a single graph. So so we can know about the trends, and in the next lecture I will show you how to build a simple trading strategy using the terms I have taught you. So let me write it for the legend, plt.legend, and we want to see the graph. So I write plt.show. Now I'm running this 5 lines of code, and you can see this is the graph in front of you, and let me zoom it out a little bit so you can see the complete screen. So you can see now this is the moving average of the 50 days, and this is the closing price. You can closely relate it with each other, and they can tell you about the trends of the average and the closing prices nowadays in the Facebook data, in the Facebook shares data. It is the dates of 2015. Now I am making you to write code again for the moving average, but now I will take the moving average of 40 days and the moving average of 200 days and the closing function, and this time I will not take only 2015. This time I will go for long years. So let me write for figure. I am again want to plot a big figure so that you can see the proper picture of all of these. So I am writing again figure size, and the figure size should be 15,8. I am telling you again that it is the width and the height, and it is not necessary to do it, but I do it normally. So now I will take MA40, just I have taken it before, and basically MA40 is FB dot close, FB square bracket close, and we have done it before, but I am doing it again for you so that you can memorize it, that how we can calculate the moving average of 40 days. Now I will calculate the moving average of 200 days. So I will generate another column, and in this column I will write MA 200. So this is the moving average of 200. Okay, and I will write FB, and in this FB I will write close, and in this close I am write dot rolling. So in the rolling argument you can write 200, 300 if you want the moving average of 300 days. In the next lecture I will tell you to make a financial strategy, so these terms will be very important for you. Now I want to plot all the 3 signals on a single graph paper. So I am writing, see clearly what I am writing, MA 40. This is the moving average column of 40 days. I will click on plot, and I am on the same, and the next line I am writing MA 200, and what it will do, it will plot for the data of 200 average, moving average of 200 days, and at last I am writing close. It is the basically the closing prices. So FB, let me correct, FB close and dot plot and this will plot all of the three on the single piece of graph, and we can find whether someone is a fast signal or some is a slow signal. Let me zoom it out and then run it so that you can see the output very properly. So it is zoomed out. So it is zoomed out now. Let me run it and you can see the signals clearly. So this is in front of you, the complete data. It is not the slice data. The green signal, you can find it as a closing price. Here it is represented, and the legend, that green signal is the closing price, and after this green signal you can find the MA40, which is the blue signal. You can say that blue signal is closely related with the close prices, the actual close prices, and the blue signal is the moving average of 40 days. And I am telling you again that this moving average is the average price over a defined number of days. It is a signal used in stock trading to understand the trends in stock trading. So it is sound to be good to find trends, and this MA200 is the moving average of 200 days, and MA40 is closely related with closing prices as compared to MA200. So MA40 is basically a fast signal, and MA200 is considered as a slow signal. In today's lecture I will stop it here, but I request you to practice all the lab 1 which we have done in the last class, and after the last class we have studied a lot of things: the moving average, the price calculation, the shift function. Let me repeat the things I have done and you have to practice it. This is the task, the 7 points, the task of the practical lab of financial analysis. But today we have calculated the price difference. So everyone knows that the price difference can be calculated by subtracting the close price of tomorrow with the close price of today. So we have studied a shift function to find the close price of tomorrow, and then we calculated the price difference. After that we have calculated daily return, which is the price difference divided by close price, and the third, we calculated the direction of our data, and the fourth point is the calculation of moving average. And in the middle of these we also studied about the list comprehension. So today the lab of financial simulation consists of 5 major techniques, 5 major topics: the price difference, the daily return, the direction, the moving average, and list comprehension, with the live coding and practical of these important terms which we are going to be used in making a simple financial trading strategy or building a trading model. Thank you for today. It's all about today. All the lectures will be uploaded on the GitHub and on the YouTube, and hope that you will practice, and in the next class we will build a simple trading model. Thank you.